Hi everyone, welcome to the channel. Today our focus is going to be on a company, ExxonMobil, the oil and gas giant that at one time was the most valuable company in the world. Now they may no longer be number one, but they still rank in the top 20 most valuable companies. And though there is a demand for renewable energy, but the need for hydrocarbons are not decreasing, but projected to increase in the coming years. In this video, we'll look at Exxon's financials, perform a stock valuation, and at the end of the video, we'll go into computer modeling the forecasted 52-week stock movement. So let's jump right into it. Here's Exxon's financials, and first thing I'll point out is the far right bar in each of the charts represents the trailing 12 months, so the first three quarters of 2023 and Q4 of 2022. Also, in a few weeks, Exxon will be releasing their 2023 full year fiscal results. But looking at the chart here in the top left for revenue, we can see it's generally been a little choppy, some down years, some up years. But a good note on this chart is that 2022 was the highest grossing year they had. And then even the trailing 12 months, it was the second highest. So this does show that there is still that high demand for oil and gas. And also, their revenue would be based on the price of oil. And also keep in mind that this is a cyclical industry, so something to always take into account when investing either in Exxon or any oil and gas company. Then for net income, we can see 2022 was the highest, followed by the trailing 12 months, which beat out 2014. So nice to see that. And 2020, we can see that went negative for net income, but that had to do with COVID, with the US and the world being shut down, not consuming as much gas and oil. So I think that was more of an anomaly and not really a reflection of the company itself. And then when we move on to earnings per share, pretty similar to net income, with 2022 being the highest and trailing 12 months being the second highest. And we're going to also see in a moment with the share count, they've been buying back shares, so helping to increase this earnings per share in 2022 and the trailing 12 months, and even in 2021. Book value, so generally increasing over time. Like to see that. Yes, there was one or two down years, but still generally increasing. So good sign there. For dividends, we can see on the charts been increasing for the last 10 years. And even during COVID, they were able to increase that dividend. Also, they've been increasing dividends for every year for more than 40 years now. So if they ever halt or decrease their dividend, it would really impact their stock price. So hopefully they can continue this moving forward. So nice to see Exxon able to increase their dividend on a yearly basis. And then shares, we can see over the past several years, they've been really focused on bringing down that share count. And I think they have allocated over 20 billion now to buy back shares over the coming years. So nice sign there. Then free cash flow. Yes, 2020 was negative due to COVID, but since then it was positive and the highest it's been out of all the other years. Though trailing 12 months did take a drop in that free cash flow, so hopefully they can pick it up. Maybe when they release their 2023 results, it would be higher, but hopefully we can see this start going up and to the right for Exxon. And then free cash flow per share, following the same trend that we just saw, with the last three bars being the highest. So nice sign. We just want this to go up and to the right as they move forward. And then revenue per share, following the same trend that we saw with revenue in the beginning. But let's move on now, and we'll go into the stock valuation. Here's the initial setup for my intrinsic value for Exxon, and we'll discuss making some modifications to this in a moment. But what we have here is an intrinsic value of $73, and with a 75% margin of safety, that brings it down to just under $55. Now, the stock is currently trading around $97. And my valuation is based on a 4% short-term growth rate over the next 10 years with a 10% discount rate, and I'm using a 3% long-term growth rate. And one thing I want to point out is the net income CAGR over the last 10 years was actually 2.6% or slightly over. And I'm using a short-term growth rate of 4%, so slightly higher than what we've seen for the past 10 years. But we're going to make our first modification now. And if you recall from our financials back in 2020, the free cash flow was negative due to COVID. So we're going to remove that because it is impacting our valuation here. So let's just jump above and find that right here. You can see back in 2020, free cash flow was negative 2.6 billion. So let's remove that. And now we're going to jump back down and see how that impacted our valuation. We can see the intrinsic value jumped up to $82.24. And with that same 75% margin of safety, brings it down to $62 or just under. Now, this is where I would be comfortable buying into Exxon. Now, I'm sure some people are thinking my 4% short term growth rate is probably on the lower side, especially since oil and gas production is supposed to be increasing over the next several years. So let's just make a modification. Let's just use a higher short term growth rate. Let's just say you're a little more optimistic than what I am, and we use 6%. We'll see how that impacts this price. We can see with a 6% growth rate, the intrinsic value jumps up to just over $96, just below where it's currently trading. And with a 75% margin of safety, that brings it down to $72. Now, one reason why I'm using 75% margin of safety is because it is a cyclical industry and there is some political risk in oil. So I feel more comfortable giving myself a nice cushion there. Now, even with 6%, if I was going to agree that, okay, yeah, 6%, I can buy into that, I still would not probably pay more than $90, even on my most optimistic days. I would wait until it falls, probably in the mid 80s or low 80s potentially. And that's where I would feel most comfortable buying in. But let's look at some other data points for Exxon. And one I really want to point out here is this return on invested capital. This is a very important data point for an investor to look at. And we can see here over the last 3 years and the 1 year, you could see well over 10%. And that's what I like seeing. Companies that are over 10% with return on invested capital. And I think a lot of this has to do with their share buyback. As I mentioned, they're putting a lot of effort and a lot of money towards buying back their shares and lowering the outstanding count. Now let's scroll down and we'll look at a few other data points before we move on. So the first one here, the PE, 9.6. So this is really in that value opportunity area. Now I know my valuation probably thinks it's slightly too high, but based on the PE value, this does appear to be a value opportunity. Then long-term debt to free cash flow, I like seeing companies under 3, and we can see they're well under that, actually below 1. And then dividends, over the last 10 years, they increased their dividends almost 35%. And I believe their dividend yield is about 4%. So you do get a nice return just on the dividends at the current price. Share count, as we've been discussing, they've been buying back shares over the last 10 years. They reduced it by 7.5%. And then net profit margin. Over the last 10 years, we can see just over 8%, and that does not take into account 2020 when they were negative. But besides from that, over the last 10 years, we can see over 8%, and really over the last 3 years, over 11%. I like seeing companies over 10%. So they have some nice data points here that are pointing in the right direction. But let's move on now, and we will perform the computer modeling to forecast the 52-week stock outlook. Here in the computer modeling software, I already ran the analysis using 2 methods. First, the M5 rule shown here, and the other random forest. And I already copied all the results and pasted it into Excel because it's a little easier to see. But let's just look at the data here first. And what we can see is this data is as of January 16th. And the far right-hand column just represents the weekly average for Exxon stock price. And the column right next to it is just the weekly average for the S&P 500 ETF. And other columns are just various other data points used for the analysis. So let's jump down and we'll look at what the prediction is forecasting out in 52 weeks. And scrolling down, we can see out in mid-January of 2025, it's predicting the stock price to be about $88.52. So actually a slight decline from where we are today. But let's jump over to Random Forest. We'll look at that prediction, and then we'll go over into Excel. So same thing here with Random Forest. The data is as of January 16th. I know it says the 15th over here, but it's actually the 16th. But let's scroll down now, and we'll see what the prediction is. And we can see for Random Forest, it's actually not far off from the M5 rule, predicting slightly higher at $88.84, but still lower than where we are today. But let's go over into Excel and look at all this a little closer. Back in Excel, I already pasted all the data from the computer modeling. And first thing I want to point out is this vertical red line represents this previous Tuesday, January 16th. And everything to the left of that vertical red line is historical stock price movement, and everything to the right is the computer modeling predictions. But let's look at a little history of Exxon stock price movement. And we can see back in 2009, it was trading around $80. Then it dropped down to $60 into 2010 and recovering to over 100 and just over $100 by 2014, but reversing until 2019 and getting back down below $80. Then we can see this big dip in 2020 due to COVID, followed by a strong recovery reaching around $120, only to drop off to where we are today at around $97. But we're going to jump over to another tab and look at the computer modeling predictions a little closer. Looking at the M5 rule first, we can see it's showing the stock price dropping to below $90 by April of this year, followed by a nice recovery getting to around $100 in the June time period, but then only for the stock to slide down again, falling to around $85, then recovering slightly out 52 weeks and closing mid-January around the or in the $88 range in January 2025, which would be a decline of about 8.5%. Now, let's jump over and we'll look at the random forest prediction next. Now, Random Forest also shows an initial slip in the stock price, dropping into the low $90 range by March of this year, then recovering to the high $90 price point and staying in that range for the rest of this year, but only to drop below $90 in January 2025 and closing out the 52 weeks in that same $80 price range as well, with just over an 8% decline in the stock price. Now, next we'll jump over and we'll just look at the average of the two. Now, looking at the average of the two methods, and since there's no significant divergence from the M5 rule and random forest stock price predictions out 52 weeks, we can see the average is also in that $88 price range as well, reaching that point with a gradual decline in the stock price over the next 52 weeks. To recap, I believe a fair value to buy into Exxon is between the low to mid $80 range, though keep in mind this does not take into account a margin of safety. And since 2009, the stock is only up around 20%. And the only way to have made significant returns during this time period is to buy at the right time during the dips and then selling when it was overpriced. And as we've seen in the computer modeling, both the M5 rule and random forest are forecasting the stock price to be in the high $80 range by January 2025. And that would be about an 8 to 9% decline from where we are today. And lastly, remember, oil and gas is a cyclical industry that also includes both political and geopolitical risks. So I hope you enjoyed this video and got some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.